Are mortgage rates in the UK about to drop? Now, the Bank of England has just come out and said we are holding firm at 5.25%. That's their flat rate. That's what they're holding firm on. But inflation is down at 3.4%. We're not there yet because the Bank of England does like it to keep inflation at about 2%. That's probably why they're holding strong, because what they're doing is currently working. We were in the high 11% and now we're all the way down to 3.4%. So that's a great thing. But what does it mean for you, and what does it mean to the day-to-day living? Because all these interest rates and all these numbers shouting out there, it doesn't really mean anything until it actually gets adjusted into real-life practice. So what does it mean? Now, the Bank of England base rate's held at 5.25%, but the inflation's come down to 3.4%. They can say, right, we'll be able to lend this person, this individual, this amount of money. But what they do take into account as well is also monthly outgoings. What you'll find is that the higher the costly monthlies are going to be, which means your affordability might not match of that. This is why we're seeing a lot of people who have took out a mortgage when the interest rate was really low now started to struggle because they took a big mortgage out at 2%, even like 1%. It was crazy at certain points, especially through COVID. But when they took them low interest rates, what you then found was actually now it's come to remortgage time, the interest rates have flew up, which means their monthly payments have risen a lot. And they're starting to struggle, especially with the cost of living, like we just said, the food bills, the fuel bills, the gas, electric, all them associated costs with owning a home and living are going to affect also on top of that with your mortgage payment going up, it's going to affect your day-to-day, it's going to affect your monthly expenditure. And that's why it's so important to sort of, when you get a mortgage, to look at the risk management. Yeah, it's all affordable now while the economy is great and the interest rates are low. Perfect. But what happens when them interest rates rise? And this is what happens. People start losing, if not selling their homes, to find something a little bit smaller, something that's more affordable. And we're all humans at the end of the day, and we go through these stages in life, and it's going to happen, and it's going to happen again, up and down. It's a roller coaster ride, especially getting a mortgage. It is a roller coaster ride. But this is why it's so important to keep on top of trends, keep on top of what's going on, especially with the Bank of England and especially with the UK inflation market. It's so important to see what's going on there to sort of stipulate and where's the best time to buy. Right now, it's a mixed bag. Some people are buying and think it's a good time because of the way the house prices are. Some people aren't buying because of the interest rates. It's normally around personal circumstances. One scenario might work for one person, but another scenario might not work for another. It's important to understand what works for you. So, what are we taking from this? Inflation rate, it's down to 3.4%. We're almost there. The Bank of England base rate is sticking at 5.25%. It's fair enough. We're almost there. They're holding their guns and we should get to a nice 2% soon. As soon as that happens, which hopefully in the next 6 months, a little bit at the end of the year, we'll see that achieved and we'll start to see the lenders drop the rate, because right now they're fluctuating. Some lenders are rising, some lenders are decreasing their rates. It's a mad world right now, to be honest with you. And that's why it's important to get a holistic point of view. Don't just go to one lender, go to a broker, go to somebody who has access to all the lenders and see what's the best rate for you. I hope this video has been insightful, and if it has, please remember to like the video, subscribe for more, and we'll see you in the comments. Cheers.